Hello, everyone. I think we're almost ready to start. So welcome to this week's Market Outlook. We do these every Wednesday live from our YouTube channel. What we do is we catch up with what's been happening over the last sort of week or so, and take a look at maybe some of the levels to keep an eye on in the days ahead. A lot's been happening. We'll talk a bit about the pound today again because it's slipped to an 11-month low. But let me just bring up the risk warning while I'm talking. So we'll take a look at what's been going on in markets. Big news as well yesterday was Tesla, the electric vehicle company. So if you're familiar with Tesla and the boss Elon Musk, there's very rarely a dull moment when it comes to Tesla. And he did tweet yesterday that he was thinking about taking Tesla private, so taking it off the stock market at $420 a share. And I think it started this week at about 320, 330. So we saw 10% surge yesterday for Tesla, slightly unconventional way maybe of informing the market of your opinions. But Tesla's the most shorted share in the US stock market. So it's the one that has the most people betting against it. And he said he just got a bit fed up and frustrated. So it'd be interesting to see. It's going to be really interesting to see what happens in, a couple of hours' time, I think, when US stocks open, to see how Tesla performs. So we'll have a look at Tesla as well while we're going through this. We'll get into the markets now, but just one last thing. If you have any questions afterwards, drop me an email. I'm in a different location today, so I can't see any comments coming in on YouTube, but drop me an email. And to find out more about the company, go to the website, www.capital.com. You can open an account, download a demo, all that sort of stuff, and play around with this. And you can follow me on Twitter for market updates and when stuff starts to look a little bit interesting. But let's jump in and take a look at the market. I just need to switch my screen round and we'll get going. So I thought we should start off looking at the pound. It has become something of a feature, I think, of these because it has been so weak. So what we're looking at here, this is pound US dollar, and it's slid again today. We're currently trading at around about 128.60, 128.70, that sort of area. It's now at 10% off these April highs against the US dollar. So it's lost 10% in the space of about less than 4 months, and it's brought the price back to where we were around about the end of August last year. Let's just flip this over to a daily chart just to look at things in a little bit more detail. So if I just step this out a bit here, you can see the size of the decline, and really, this trend line that we've been picking up on for a while now, over the last few months, continues to do its job. And this is the level, even though it's I think it's always tempting to try and pick the bottom in a market like this. The pound seems to stabilize for a couple of days, maybe a week. Maybe we get the odd rally, and then it just runs out of steam again. So I think for now, at the very least, we'd need to see pound US dollar through these old highs from the end of July. So the old highs just above 132. So we're currently trading 128.70. So we'd need, a 330, 340 point rally from where we are now to suggest this weakness was changing. So it is still incredibly weak. Any strength continues to be viewed as a selling opportunity. It's the ongoing discussions, or maybe lack of discussions, lack of progress about Brexit that's driving, I think, the pound lower. We have very little in the way of anything positive coming out, I think, from the government in the UK at the moment. So it's really not helping. It's a market that is very weak. I think if we were looking at the next obvious level, I think 128 for pound US dollar, was support back here, sort of where are we looking? August last year, we did see the market, look as if it was sort of holding above these old levels. Hang on, I've gone back too far. So around about here. So the third week of August last year, sort of this whole 126 to 128 area. So while 4 months ago, it would have seemed ridiculous that we'd be down at these levels, this is where we are. And it's a market that just remains incredibly weak. I think that fall through 129 this morning, many people would have expected that to be maybe some sort of support, being a round number, sort of psychological support. But I think the fall through there has just kicked out more stops, and the market's pushed lower. So pound US dollar, incredibly weak. At the moment, stock shows no signs of changing, still under a lot of pressure, and it can't hang on to any rallies. Let's take a quick look at euro sterling. This is euro against the pound. This had been a little bit boring for much of the last sort of 3 months and the first few months of this year, sort of trapped in this massive sideways range, really, with weakness down towards 86, bringing the buyers back out, strength up towards 89, bringing the sellers. But what's interesting here on the combination of the pound weakness today and the euro strength, we're seeing it threatening the top of the range. So whilst euro sterling has been maybe a little bit dull in recent weeks, there we go. We're back up to having a look at sort of 90.30 is a level to watch. And if this pound weakness carries on, I think we'll hear people starting to talk once again about the potential for parity, for euro parity with the pound, where €1 is worth £1. Let's not get ahead of ourselves. That this sort of 0.9 area is a big zone. So you could argue that maybe the euro sterling move is a bit overdone to the upside. So any sort of weakness over the next few days, some people could view as a short selling opportunity, but with stop losses above sort of 90.50, that sort of area. So I think the pound has been interesting for a few months now, but euro sterling might be an interesting one to watch over the next few days or so. And let's just take a look. Let's take the pound out of the picture. Let's take a look at euro dollar. I should mention, of course, that later this week, on Friday of this week, we've got the latest GDP number for the UK. So how well or how badly is the UK economy doing? So maybe that'll give a bit of a lift to the pound, but at the moment nothing seems to be sort of building up any sustainable rallies. But here's our euro dollar chart. This has been another one that's been maybe a little bit boring over the recent few months, but we do have definite levels in euro sterling. We've got on euro dollar, sorry. We've got these old lows ahead of sort of 115 that have done a great job of holding the market up. And over the last couple of days, this has played out again. So euro dollar is stuck in this wide sideways range, but it is tradable. Weakness down towards 115. How low did we get on Monday? So 115.30 was the Monday low. And on the upside, sort of 118 to 118.50, it can't get through there. So we have this range that hasn't changed. And once again, the range is held again. So the bounce back that we've seen in the euro over the last couple of days has definitely helped it against euro sterling. But for now, the pound looks just incredibly weak. Let's have one last look at maybe the short-term chart on pound against US dollar. Let's flip it over to an hourly chart and have a look at that. And you can see the size of the decline over the last 4 hours or so. We've dropped almost 100 points, from 129.60 down to where we are now, trading around about 128.60. So if we do see a rally, there are lots of obstacles to watch on the way up. Sort of 129.70 from just yesterday, then back here from the beginning of August up at 130. So it doesn't seem as if we're going to see, in the very short term at least, any sort of fantastic turnaround from the pound. It really is getting battered at the moment, but I think it's an interesting one to watch. Let's take a look at some other markets. Let's have a quick look at Bitcoin. There was a few people asking to have a look at Bitcoin. Bitcoin has done, again, what it's done for most of this year. We had that news a couple of weeks ago, 3 or 4 weeks ago now, that really did lift the price. We saw, I think there was talk about the potential for a Bitcoin ETF that ended up getting blocked, but also about BlackRock setting up a group to investigate the feasibility of investing in cryptocurrencies. The news lifted it, but as has been the case all this year, when the news has dried up for the cryptocurrencies, it's just trailed off again. What's going to be interesting, though, I mean, it's dropped from about 8,500 to currently trade about 6,500. So it's dropped a couple of $1,000s. It's a big old move, 25% move in the last month or so. What's going to be interesting is if it holds down at these levels again. All this year, 5.5 to 6,000 has brought the buyers back out, after that big decline from the December 2017 lows. So whilst, Bitcoin is definitely not something that I look at every day, I think it gets interesting when it gets down to roughly where it is now and even sub 6,000. Do we see these old lows come back into play? So it's drifted off again. Let's see what happens over the next few days. See if we see any strength coming back in, as we have done all this year at these levels. Let's start looking at stock markets. An incredible bounce back, and it continues. This is the S&P 500. So we'll have a look at the tech stock market in a minute, and also maybe the German DAX as well, because that's one that's always popular. So here's our S&P going back to January this year, when markets fell off a cliff. So went crashing down into February, big sideways range through till April. But you can see the recovery that started off these lows 2nd of April is still going strong. And we're now, I think, something like 0.5% away from those all-time highs for the S&P 500. Okay, so we've got our recovery going on. So I think, again, it's going to be a really interesting couple of days. I think the official in trading hours high was around about 28.75, that sort of level. We're currently trading at 28.60. Out of hours, it hit 28.80. So we are definitely within spitting distance for these US stock markets of selling fresh all-time highs. You could say that clearly. I think it's a bit overcooked at the moment. Let's put an RSI on here and see where it looks like. Let's put that on the chart. You'd guess it's, there we go. It's heading towards overbought. Let's just zoom it in. And arguably a bit of bearish divergence going on, where the market's moved to a high, then moved higher still, but the RSI hasn't followed through. So this is the most extreme we've seen the RSI since January of this year. You can see, just because of the size of the moves that we've had, how it is maybe a bit overstretched. But at the moment, any weakness, in a trend like this, still looks like something of a buying opportunity. If we flip this over to the hourly charts, I think for shorter term traders, we got lots of potential levels to watch just looking through August. We have bits of support left at 28.50, stronger support 28.35, then 28.25, then big support back here at 2800. So I think, even though you could easily argue that US stock markets are due at least a bit of a correction from where we are now, there are lots of levels on the way back down that we'd be looking to see if support comes out and buyers come back in. So let's see what happens. But incredibly strong. Maybe in the next couple of weeks, we'll be talking about US stock markets hitting fresh all-time highs again. Let's take a look at the tech index, the Nasdaq 100, because we had that wobble. When was it? A couple of weeks ago now, when we had poor earnings from the likes of Facebook, Netflix, disappointed, all that sort of stuff. So we did see a wobble for stock markets, but look how strong they've bounced back. Again, for the Nasdaq, we're currently trading ahead of the open at around about 74.60. The all-time high is about 75.12, including the out-of-hours market. So we're only 50, 60 points away from all-time highs on the Nasdaq. So US tech stocks bouncing back, still strong. Quick look at Facebook, then we'll have a look at Tesla. So Facebook had those pretty bad results, as we can see on the chart. So set fresh all-time highs up above 210, and then just got clobbered, slipped back to 170. But even Facebook over the last week, we have seen the buyers coming back in. So I suppose, an aggressive trade here, an aggressive longer-term trade, if you believed that Facebook was going to bounce back and that longer term trend was still intact, perhaps an aggressive trade is to be a buyer and have a stop loss under these most recent lows, because if you're going to take the view, well, it was an overreaction to the results, then maybe the move down towards 166, 165 was a bit extreme. So it's interesting, I think, to watch this to see if it does claw back those losses. Let's take a look at Tesla, though. Always an interesting share, Tesla. Let's just quickly look at the moves yesterday. So, you can see when the news started breaking with Elon Musk's tweet saying that Basically, he was sick of all the scrutiny and all the negativity towards Tesla, and was thinking about taking the company private, so buying all the shares back effectively or taking it off the market as a listed company at 420 a share. Yesterday it was trading around about here. So we go early on in the session, trading around about 345. I think they did get suspended. So this trading stopped for a short period of time because the move had been so big. But you can see they did trade as high as 385. So we had, what's that, something like a $40 range yesterday, maybe even slightly more, maybe getting on for almost $50 range yesterday in Tesla. So big moves. What's going to be interesting is today. I think it's going to be a really interesting one to watch when markets open at 2:30 UK time, 9:30 US time, 9:30 in the morning US time. Are people believing this story that he is serious about taking it private and paying $420? It finished last night at 380, so that's still 10% higher than where we are now. Or do people think that actually it's just a bit of bluster? He's not going to do it, and the shares are going to get knocked back. So I think it's going to be a pretty volatile one for Tesla today. But just to put this in perspective, let's zoom this out. So it has been sort of something of a nothing year for the share price. We saw fresh all-time highs just back in September last year, so just under a year ago. We saw fresh all-time highs for Tesla. It's been drifting a bit this year. It's been sort of flipping around 300, 350. The move last night, takes it again very close to these old all-time highs for the share price, up around about 390. So, will people think, well, actually, I should have sold a year ago when they were at 390? Maybe I should be a seller now. Or are people thinking, well, actually, the guy's serious, and we could see 420 a share? So I think it's going to be really interesting to see how that unfolds this afternoon. So, a lot of focus on US stock markets in the past 24 hours because of that, and still going strong. Let's take a quick look. Let's bring it back to Europe. Let's have a quick look at the DAX. So we'll zoom in. So we are seeing these European markets lag a bit. We've got the S&P 500 less than 1% away from its all-time highs. But here's the DAX. Clearly the DAX has bounced back off these old lows. And we're still recovering, but we're still, in terms of DAX, we're a long way away from 13,500. We're almost 1,000 points away from those levels up there. So about 8% away from the levels from earlier in the year. So I think it's going to be really interesting to watch stock markets, because I'd expect, if we do see a breakout to fresh all-time highs in the US, maybe a lot more confidence maybe comes back to markets after the January wobbles, and we see these European markets start to get dragged higher. They have performed well over the last couple of months, but not really the same sort of performance as we've seen in the US. So I think stock markets is a big one to watch over the next week or so to see how we get on. And then finally, let's wrap things up by looking at gold and oil. Let's look at oil first of all. We'll look at US crude. This is pretty much, as it has been for a while now. We've had this, I talk about this every week, this enormous move that we've seen, relatively speaking, in the price of crude oil that's been going on since June last year, when it was down around $42 a barrel. We touched 73, nearly 74. The market sold off, but yet again over the last 5 to 10 days, we've seen this trend line do a great job of holding the price up. So the really big level to watch for oil, I think, is this whole zone of these recent lows. If we're looking at the lows from here, from $63 a barrel back on the 17th of June, up to these most recent lows at 66. So I think 63 to 66 is the big support zone for oil. And whenever we've seen it knock back into here over the last 5 months or so, we've seen the buyers come back out. So I think it's a really interesting area to watch to see what happens down here. But for now, the trend is up. And with the trend being up, from a charting and technical analysis point of view, would expect it to push back up above 73. Okay, but these are the big levels to watch when it comes to the price of oil. And let's wrap things up by looking at gold. This is another interesting one, because we've talked a bit clearly about how the pound's been weak, And there's a bit of US dollar strength has fed into that, but it is mainly the ongoing problems about the lack of progress with Brexit. But gold's another interesting one because like the pound, it has slid so much in recent months. You know, it's gone from being 1360 an ounce back in April. 4 months later, we're trading just above 1200. So it's currently trading at 1210 an ounce. So it's lost more than 10%. So it's what, 12% or something in the last 3 to 4 months, the price of gold. That trend is still down. You know, I think we need to break through at least 1250 on gold to start shaking off that trend. But what's interesting is we are back to an area where in the past, if I just scroll back to here, back to 10th of July, 2017 levels, 1190 to 1200 ended up being quite the turning point. So back then, the market saw a lot of value for the price of gold down at these levels, and it kick-started the move back up to 1350. So even though it's still weak, the question, as usual, is, are we going to see it start to turn around from here? We do have a bit of bullish divergence going on the RSI. I've talked about this a bit in the past, where the market slips to a low, then slips lower still. The RSI starts making higher lows. I don't think that, again, there's any, like the pound, there's absolutely no urgency to be piling in and being a buyer, because I think it's still relatively weak. But I think it would be interesting to see if we do see the price of gold start to build some sort of recovery from here in this 1190 to 1200 zone. So we'll start wrapping things up. I think the market to watch, well, pound US dollar, because it slipped so low. I mean, it's just still weak. You know, it's a market that just cannot hang on to any recoveries. I think maybe the more interesting market is the US stock market. So I'd look at the S&P 500 to see, are we going to see fresh all-time highs? Let's take a quick look at the Dow. I'm going to guess it's maybe lagging behind a little bit. Yeah, so the Dow is only 30 shares, of course. The S&P 500 is 500 shares. There are more tech shares in the S&P, so that has helped the performance. So the Dow is still about 1,000 points, about 5% away from those old highs. But let's see what the S&P does. Then this afternoon, I think the immediate one to watch is Tesla, after yesterday's sort of social media inspired strength. So I think for me, stock markets could well be the one to watch for the rest of this week. And then on Friday, we have UK GDP data, and then we've also got US inflation data in the afternoon. So we've got a bit of data coming in at the end of the week. We'll start wrapping things up there, but as usual, any questions or comments, feel free to drop me an email, david.jones@capital.com. We'll do it all again next Wednesday. And to find out more about the company, try out a demo, open an account, all that sort of stuff. If you go to Capital.com, all the information's there. But thanks for coming along, and we'll stop things there.